$89 billion. That's how much billionaire insiders liquidated in 6 months while telling you everything's fine. I'm Marcus Caldwell, and I've been tracking the largest coordinated exit in market history. Bill Gates dumped 2/3 of Microsoft. Buffett sold stocks 3 straight years. Bezos liquidated $8.5 billion Amazon in 9 days. This isn't portfolio rebalancing. This is evacuation. Let me show you what they see. The numbers don't lie. Bezos sold $8.5 billion Amazon, 50 million shares in 9 sessions. He'd never sold more than $3 billion in an entire year before. $8.5 billion in 9 days. That's panic disguised as strategy. Zuckerberg dumped 500 million Meta. Jamie Dimon sold 150 million JP Morgan. First sale since 2005. The man who runs JP Morgan, who sees every loan, every derivative, every economic indicator, decided now is exit time. After 18 years holding, that's not retirement. That's escape. Look at what they're selling versus buying. Selling technology, consumer discretionary, financials, the exact sectors driving S&P 500 to records. Buying trash collection, railroads, cash. Gates shifted out of Microsoft into Berkshire, waste management, Canadian National Railway, garbage trucks and trains. Buffett sits on $325 billion cash. Not buying stocks, not acquiring companies, just waiting for the fire sale. When assets crash 50%, $325 billion buys everything at half price. Sell high, hoard cash, wait for panic, buy low. If Buffett's liquidating after preaching buy and hold for 60 years, he knows what's coming. Before I show you 5 crisis signals, hit subscribe and notifications. This channel delivers analysis institutions don't want you seeing. Your subscription supports independent research. Now the signals. Signal 1, valuation extremes. S&P 500 trades at 22.2 times forward earnings, above 5-year average of 20, 10-year average 18.7. S&P only sustained PE above 22 twice in 4 decades. Dot-com bubble 98 to 2000. COVID bubble 2020 to 2021, both times markets collapsed. Dot-com down 49%. COVID down 25%. We're back above 22. Billionaires are selling. That's pattern recognition. Signal 2, earnings decelerating, spending exploding. Microsoft reported 16% revenue growth. Free cash flow fell 7%. Why? Burning billions on AI infrastructure, data centers, GPUs, servers. Betting AI justifies investment. What if it doesn't? What if AI is another blockchain, another metaverse burning capital without profits? Billionaires aren't waiting. Selling while AI hype inflates valuations. Signal 3, concentration risk. Top 7 stocks are 32% of S&P. Microsoft, Apple, Nvidia, Amazon, Meta, Alphabet, Tesla. 32% in 7 companies. Highest since Nifty 50/70s. Those stocks didn't underperform when markets turned. They imploded. When everyone owns the same thing, flows self-reinforce up but self-destruct down. Selling starts. Index funds liquidate largest holdings first. Prices fall, triggering more selling, falling further. Liquidation, cascade. Billionaires see it forming. Signal 4, credit tightening. Corporate debt to GDP 110%, higher than 2008 crisis. Companies borrowed trillions at 0 rates, now 4%. Debt at 1% refinances at 4%. 4 times interest expense increase. Profitable at 1%, unprofitable at 4%. Bankruptcies accelerating. Credit spreads widening. Bond markets pricing defaults. Billionaires see companies struggling to refinance. exiting before contagion spreads. Signal 5, insider selling at crisis levels. Sells to buys 4.7 to 1. For every share insiders bought, they sold 4.7, highest since 2007. Before Lehman collapsed. CEOs and CFOs selling at record rates. Retail buying through 401ks and index funds. Uninformed buying what informed dumps. That precedes every crash. Gates Foundation at $36.58 billion, down from $48 billion. Microsoft was 28.6%, now 12.8%, 55% reduction. Not because Microsoft's bad, because even great companies aren't worth 40 times earnings when markets reprice. Gates bought Berkshire, Waste Management, Canadian National Railway. Why? Berkshire is $325 billion cash with optionality. Crash comes. Berkshire buys distressed. Inflation hits. Tangible businesses have pricing power. Recession arrives. Diversified revenue provides stability. Ultimate defense. Waste management is trash collection. Essential regardless of economy. Near monopoly. Insurmountable regulatory barriers. Steady cash flow. Inflation-protected pricing. Recession-proof. Gates holds $7.5 billion. Canadian National moves freight. Only transcontinental rail connecting 3 coasts. Irreplaceable infrastructure, predictable cash flow, not growth stocks, not AI plays. Bunker assets. For when glamorous sectors get obliterated. Gates positioning where dividends beat growth. Tangible beats hype. Survival beats speculation. Macro backdrop. Deteriorating. Unemployment rose 3.6 to 4.2% in 8 months. Triggered SOM rule recession indicator. Half-point rise means recession imminent or started. Historical accuracy 100%. Billionaires see layoffs accelerating. Job openings declining. Selling before earnings collapse. Consumer spending faltering. Credit card delinquencies 6.8%. Highest since 2011. Auto loans 5.6%. Highest since 2010. Americans can't service debt. Maxed credit means spending declines. 70% GDP is consumer spending. That drops. Everything drops. Commercial real estate freefall. Office buildings worth 30 to 50% less than 2019. Remote work permanent. Buildings vacant. Loans defaulting. Banks losing money, tightening lending. Activity slows, earnings fall, stocks follow. Geopolitical instability. Ukraine, Gaza wars. U.S.-China tensions. Tariffs, sanctions, deglobalization. Supply chains fragmenting. Globalization companies face margin compression. Billionaires front-running reality. Bubble cracking. $200 billion spent on infrastructure. ChatGPT, Copilot, Gemini. Impressive but not profitable at scale. Revenue doesn't justify spending. Not yet. Maybe never. If AI's overhyped, market leaders fall hardest. Timeline isn't distant. It's imminent. Phase 1, now through March. Insider selling continues. Retail buying. S&P near highs. Low volatility. High complacency. Media says resilient economy. Soft landing achieved. Smart money liquidating quietly. Building cash. Preparing. Phase 2, April through June. Cracks appear. Major earnings miss. Tesla, Nvidia, Microsoft. Triggers reassessment. S&P down 5, then 10%. Volatility spikes, VIX 12 to 25. Margin calls, leveraged liquidation. Media says healthy correction. Billionaires watching, waiting. Phase 3, July through September. Correction becomes crash. S&P down 20%. Tech down 30 to 40. NASDAQ freefall. Recession declared. Earnings collapse. Layoffs accelerate. Unemployment 6%. Spending craters. Billionaires were right. Exited at top. Sitting on cash while accounts implode. Phase 4, October beyond. The bottom. S&P down 30 to 40% from peak. Panic selling everywhere. Forced liquidation. Media headlines worst crash since 2008. That's when billionaires deploy. Buffett's $325 billion gets put to work. Buying stocks at 50 cents on the dollar. Acquiring entire companies at distressed valuations. Gates Foundation buys more Berkshire. More defensive stocks. More cash-flowing assets. Market eventually recovers in 2027 or 2028. Billionaires will have added another $50 billion to net worth, while retail investors still trying to recover from devastation. That's the game. That's how wealth transfers happen. From the unprepared to the prepared, from the emotional to the disciplined, from those who act late to those who act early. This pattern repeats every single cycle. 2000, 2008, now 2026. The names change, but the playbook stays identical. Here's exactly what you need to do, and I mean starting today, not next week. First, brutally assess your exposure. If you're heavily invested in S&P 500 or tech-heavy index funds, you're concentrated in exactly what billionaires are selling. That's not coincidence. That's the setup. Reduce that exposure immediately. Not to zero, but to a level where a 30% market decline doesn't destroy your financial plan, where you can sleep at night when volatility hits. Second, raise substantial cash positions. Not because you're trying to time the market perfectly, because cash is pure optionality. When quality assets go on fire sale, you need buying power ready to deploy. Buffett's sitting on $325 billion in cash for a very specific reason. He's waiting for the moment everyone else is forced to sell. You need to do the same on your scale. If you're currently fully invested, consider moving 10 to 20% into cash or short-term treasury bills immediately. That cash will be your ammunition when opportunity presents itself. Third, aggressively shift into defensive sectors now. Utilities that provide essential services. Consumer staples people buy, regardless of economy. Healthcare that's non-discretionary. Waste management, railroads, infrastructure. Boring assets that generate actual cash flow and pay real dividends. The exact stuff Gates is accumulating. These sectors won't make you wealthy overnight in bull markets, but they won't annihilate you in bear markets either. That's the entire point of defense. Fourth, immediately eliminate all leverage from your portfolio. If you're using margin to amplify positions, if you're trading options for speculation, if you're holding leveraged ETFs for outsized gains, you're setting yourself up for complete obliteration when volatility spikes. Leverage is a double-edged sword that cuts both ways. It amplifies gains in good times, but it absolutely destroys you in bad times. And right now the billionaires are screaming that bad times are imminent. Fifth, establish positions in physical assets that hold value. Gold and silver that can't be printed by central banks. Real estate that generates rental income regardless of market conditions. Commodities that represent tangible value. Things that maintain purchasing power when paper assets collapse. Buffett owns railroads and utilities for this exact reason. Gates owns infrastructure that can't be digitally created or inflated away. Even a small allocation of 5 to 10% of your portfolio in physical precious metals provides genuine insurance against catastrophic scenarios. Finally, and this is critical, completely ignore the noise. Financial media will continue telling you to stay fully invested. Your financial advisor will say stay the course and don't panic. Talking heads will claim this time is somehow different, but the billionaires, the ones with billions of dollars actually on the line, the ones who have access to information and analysis you'll never see, are doing the complete opposite. They're selling. So ask yourself one brutally honest question right now. Do you trust the media narratives designed to keep you invested? Or do you trust the documented actions of the world's most successful investors who are voting with their wallets? Because their actions couldn't be more crystal clear. They're systematically selling stocks. They're aggressively hoarding cash. They're defensively buying boring assets. They're methodically preparing for a market crash. $89 billion in insider sales over just 6 months. That's not a polite warning. That's not a gentle suggestion. That's a blaring AIR raid siren that's been sounding for months, while everyone pretends they can't hear it. The data is completely public and available to anyone. The pattern is undeniably clear to anyone willing to look. The implications are terrifying to anyone who understands markets. Bill Gates sold 2/3 of his Microsoft holdings, the company he founded. Warren Buffett has been a net seller for 3 consecutive years, while markets hit all-time highs. Jeff Bezos dumped $8.5 billion in Amazon in 9 trading days. Mark Zuckerberg sold $500 million in Meta. Jamie Dimon sold JP Morgan for the first time in 19 years. These are not random isolated acts by panicked individuals. This is systematic, coordinated, intelligent flight from risk. This is the smart money exiting before the crash, and the next wave of 13F filings covering Q4 2025 will show even more selling, even more cash accumulation, even more defensive positioning, even more preparation for what's coming. The smart money has already left the building. The exits are getting crowded. The question you need to answer today is simple. Will you follow them out the door while there's still time? Or will you stay inside holding stocks that the richest, most informed people on earth have decided they no longer want to own? Will you wait for someone in mainstream media to give you permission to panic and protect yourself? By the time that permission comes, it will be far too late. The crash will have already started. The billionaires will be comfortably sitting on mountains of cash, and you'll be left holding the bag watching your retirement account implode. Don't be the person who looks back in 2027 wondering why you didn't see this coming. You're literally seeing it happen right now in real time. The billionaires are telling you something critical through their actions. The SEC filings document it all. The pattern is screaming at you. The only remaining question is whether you're actually listening, whether you'll take action, whether you'll protect what you've worked so hard to build. If this analysis opened your eyes to reality, hit that like button and share this video with someone who needs to see it. Drop a comment below telling me what defensive moves you're making right now. I want to know you're taking action. This is Marcus Caldwell reminding you that in markets, the early bird doesn't just get the worm, the early bird survives. Stay sharp out there.